We're guiding you through tax time. You know, it can be a very stressful time in people's lives, and there are ways to make the process easier. Better yet, we want to make sure you save money and get as much money as you can. Certified public accountant Shane Stroberg is back to tell us about the dependency test.
The dependency test.
And welcome back to Primetime, Shane.
Thanks for having me back.
And during break, I asked Shane, could I write off my intern? Could I write off the floor director? Could I write off everything? He said, no.
No.
Yeah,
no. Well, it depends.
Could I write off my producer?
It depends.
No.
It depends. There always depends. Every time you ask me a question, the first answer.
It depends on dependency.
It depends, yeah.
Okay, sure. Yeah. Tell us. Break it down.
So the dependency test. I was out at Little League this weekend. Hundreds of little kids playing baseball and running around, and I started thinking, gosh, what can I talk about on Monday? And I'm daydreaming, and I go, hey, I'm looking at hundreds of dependents running around here.
Don't you wish you could write them all off?
Yeah, zero tax, yeah. And it came to me that, you know, I have a lot of times I have clients that come in and ask, hey, so-and-so lives with me. Can I take an exemption for them? You know, my daughter lives with, you know, her stepdad. You know, different things go on. So I got to thinking, you know what, this might be something that the viewers would have questions about and are wondering. So the dependency test. Everybody knows on your tax return you get deductions for certain things. Then you have exemptions. Exemptions being your personal exemption for being a U.S. citizen and filing a tax return. It's $3,800. If you're married, it's $3,800 for you, $3,800 for your spouse, and then $3,800 for every dependent that meets these tests as you go.
I got 4 kids, but unfortunately, one's already at the house, so that's good. Keep going.
You got one in school.
I'm going to adopt some too, I think.
We're going to talk about adoption,
Okay.
adoption and foster children, of course. But the dependency test, I thought we'd start with what's at stake. What's at stake is, like I said, your exemption, the $3,800 exemption you get. There is the earned income credit, several $1,000s worth of credit that can happen on a tax return for certain wage earners, people that earn a certain amount of money. If you make a ton of money, it's probably not a credit you get. But if you're not doing so great on the paycheck and you're working paycheck to paycheck, the earned income credit is something that that your dependents can help increase. There's also child tax credit. We talked about that a few weeks ago. You've got to have a dependent to take a credit for their school. So if they don't meet the dependency test for you and you're paying for their school, sometimes you might be out of luck on that school credit. And then the last thing is head of household. It's something you see a lot of single parents file as head of household. They don't know what it means. They don't know why it's there. Just somebody checks a box on their tax return and they file as head of household. Because they're like, there's nobody
but me paying the bills.
That's it. That's it.
So what's the benefit of that if you check the head
of household? You get a higher standard deduction if you're a standard deduction taxpayer. You get preferable rates. Everybody knows there's single rates, there's married filing joint rates, there's widowed rates, and there's head of household rates. So your tax rates are lower if you're a head of household, meaning the government's going to try and take a little bit of a break on you and your tax burden because you're heading up a household with kids and you're trying to pay for everything. You might be a single income earner. In addition to that, there's additional exemptions you get for it. You get a higher exemption amount for the dependents and for yourself. So it's a preferential situation. To meet the dependency test, it's usually pretty simple. Most people go right to the first one of, do I provide 50% of their support? That's a pretty easy no-brainer, but there's steps and there's things that you have to satisfy before you get there. For a qualifying child, you have to be a son or daughter, a stepchild, stepdaughter, or a descendant of any such thing. Sometimes there's great-grandchildren, grandchildren, you know, for one reason or another. Maybe a parent is on an extended vacation with the state, so a great-grandchild lives with grandma. There's a lot of different things that put a child on a tax return as a dependent child. To be a dependent child, you have to be one of those. You have to be under age 19 or under age 24 if you're a full-time student or disabled. And on top of that, your principal place of abode has to be in that home. You get away for school, if there's medical time spent out of the house, if they're in, you know, Ronald McDonald House or something like that, if they can't stay at home. Different reasons kids might not live at home.
But you're still paying for that.
You're still paying for them. The typical reasons, other than I kicked them out and they're on their own, different story. But if it's school, those types of things,
so no kicking your kids out.
You can't if they don't listen. I tell mine all the time. You got to listen or you're done. You're out. You know, they're only like 5, so it scares them and they listen. So.
Well, I had to talk with my sidebar note. I had to talk with my 19-year-old who moved back home after going to college because she couldn't stay in the dorm. And I said, look, because she was getting jealous how much money I was spending on her little
Right.
sisters. I said, let me tell you something. I'm letting you move back in and supporting you out of the goodness of my heart.
Yeah.
I mean, you're of legal age, so
that's how it is.
To be a student, you should be a little broke.
It's
you
not
should
a
be
privilege.
appreciative. Yeah,
you learn more. You learn more when you're
It's a rite
hungry.
of passage. It kind of goes hand in hand. Get
That's
tough.
true.
I want
That's
you to be
true.
successful in life.
That's true.
Okay, so is there any other criteria of the dependents?
There's other dependents out there. That was a dependent child. So your child, your grandchild, that type of thing. But then if you have an elderly parent, if you have an aunt, an uncle, somebody that you're taking care of, nieces, nephews, that's what you would call a qualifying relative. Qualifying relative pretty much extends all the way down the line for in-laws, for stepchildren, for aunts, for uncles, for grandparents, for parents. In addition to, and it's funny, in the code it says, an individual who lives in your principal place of abode for the entire year. So if you just got a kid that showed up and you support them and they stay at your house for the whole year, they're a dependent as well. If they're not related to you, et cetera, et cetera. I've seen that happen a couple of times. Somebody just, puts their arm around somebody and takes care of them, which is a great thing. And I think it's actually a pretty cool thing that the government lets you take an exemption for that, for opening your home and your heart to somebody. Same rules for qualifying relative, 50% of support. Only for a qualifying relative, they have to earn less than $3,800. $3,800 is that exemption amount. So the idea would be if they earn more than $3,800,
they could be on their own.
They should be filing their own return, taking their own exemption, and
How are
dealing
you
with their own
supposed to live on your own with $3,800? In San
Diego, it's tough. In San Diego, it's tough. There's places in the country maybe you could do it, but in San Diego, it's a very difficult thing to do. And it's just the IRS's way of making that child do their own thing, file their own tax return, grow up a little bit. So once your income gets over that $3,800 and you're not a qualifying child, you don't qualify as a qualifying relative. The final thing I wanted to talk about is I have clients that come in all the time. Maybe they're divorced, maybe they're separated, maybe they're an unmarried parent. And I always tell them that they'll say, well, I take my son this year, it's my turn to take my daughter. And my next question is, who does your spouse's tax return? Reason being, it used to be in the old days, the quickest way to get an audit notice is to have two separate parents both put the same child on their tax return. And once it goes through the IRS and they process everything, they look at the social security numbers on there, a notice comes out and both parents get audited. Not because they did anything wrong, not because they're stealing, because they both took a child and the IRS says, hey, can't split the baby, one of you's got to take them. These days, everything is filed electronically, so that doesn't happen that often anymore. If I file a tax return electronically and there's a social on that tax return that's already been used, the IRS will reject it and say, hey, it's already been reported, straighten it out, fix the problem. So in those instances, all the same rules apply that I just said for qualifying child and qualifying relative. I always tell my clients, have the same person do both returns. One, that's going to ensure everything's put in the right place. And two, they can look at it. One of the criteria, 50% of support. Well, if anybody's ever been in a separated relationship or a divorce, a lot of times it's not exactly 50-50. Maybe it's more one way or the other. Maybe it's dead down the middle. It's pretty hard to figure out if it's exactly down the middle. So in that case, I tell them, look at it. Let's put them on both returns. I'll do the return. I'll split it. I'll look at it both ways. And I'll make sure you file the return the best possible way.
Because you're fair. And if you have any more questions, thank you, Shane. We got to wrap. But if you have any more questions, pull up Shane's website. There it is, Stroberg Associates. And you can also email us here with any questions if you're confused, or call them directly. And there's a way to email you there as well, right?
Sure.
And you always answer our accounting questions, our tax questions, and you keep it easy, simple.
Keep it simple, stupid.
Thank you for taking care of our viewers.
Thank you.